Hey everyone, welcome back to Secure Your Benefits, your trusted source for everything related to Social Security, benefits, and financial planning in the United States. Today, we're diving into a topic that doesn't always get the attention it deserves but affects millions of American Social Security and self-employed workers. Whether you're a freelancer, gig worker, small business owner, or part of the growing number of Americans working for yourself, understanding how Social Security works for you is essential. Let's start by addressing a common misconception. Just because you're self-employed doesn't mean you're excluded from the Social Security system. In fact, self-employed individuals pay into Social Security through self-employment taxes, and the benefits you may qualify for are very similar to what traditional employees receive. But there are some important differences, responsibilities, and recent changes that you need to be aware of, especially as of mid-2025. First, let's talk about how self-employment income is taxed. When you work for an employer, you and your employer split the 12.4% Social Security tax, 6.2% each. But when you're self-employed, you're responsible for the full 12.4%, plus the 2.9% Medicare tax, bringing your self-employment tax to 15.3% on net earnings. If your income exceeds certain thresholds, you may owe an additional 0.9% Medicare surtax. The good news is that you can deduct the employer equivalent portion of your self-employment tax, 6.2%, on your federal income tax return. This deduction doesn't affect your net earnings for Social Security, but it can help reduce your overall tax burden. As of 2025, this deduction still applies and is one of the few tax reliefs available specifically for the self-employed in relation to Social Security contributions. Now, how does this all affect your future benefits? Well, your Social Security retirement benefits are calculated based on your 35 highest earning years. For each of those years, the Social Security Administration (SA) takes your net self-employment income after allowable business deductions and applies an indexing formula to determine your average indexed monthly earnings (AIM). Then, your AIM is used to calculate your primary insurance amount (PIA), which is the basis for your retirement benefit. What many self-employed people don't realize is that underreporting income to save on taxes today can significantly reduce their Social Security benefits later. Every dollar that you don't report now is a dollar that won't count toward your earnings record. So while it may feel like you're saving money in the short term, you could be sacrificing thousands of dollars in lifetime benefits. And since Social Security also provides disability and survivor benefits, underreporting can also hurt your family's future financial security. As of July 2025, one important update to be aware of is the increased focus on gig economy workers and platforms like Uber, DoorDash, Etsy, and others. The IRS and SA have been working together to improve reporting mechanisms for these workers. New rules require digital platforms to report annual earnings of $600 or more, down from the previous $20,000 threshold with 200 transactions. This change, implemented under the American Rescue Plan Act and enforced more rigorously in 2024 and 2025, means more gig workers will now receive Form 1099-K, increasing visibility into earnings that may not have been reported before. For self-employed workers who haven't been consistently paying into Social Security, there is still time to catch up. The SA allows you to file amended tax returns for up to 3 years back, meaning if you didn't report self-employment income in the past, but want to get credit toward your benefits, you may still be able to fix that. However, penalties and interest may apply, and it's crucial to consult with a tax professional before making any changes. Another recent development to consider is the increased attention on portable benefits for gig and contract workers. While Congress has yet to pass sweeping legislation in this area, several state and local governments are exploring ways to make Social Security and retirement saving more accessible to non-traditional workers. There's been ongoing discussion about whether to allow gig platforms to contribute a portion of earnings towards Social Security or portable retirement accounts on behalf of their workers. While no federal changes have been finalized as of July 2025, These discussions show growing recognition of the gaps in the system and possible solutions in the near future. If you're self-employed and approaching retirement age, timing your benefit claim is just as important as for traditional workers. You can claim early retirement benefits at age 62, but your monthly amount will be permanently reduced. On the other hand, delaying benefits past your full retirement age, usually between 66 and 67, depending on your birth year, can increase your monthly check by up to 8% per year, up to age 70. Since self-employed individuals often have more control over their workload and schedule, some choose to continue working part-time while delaying their benefit claim to maximize their monthly payout. Another option to consider if you're self-employed and married is spousal benefits. Even if you haven't paid much into the system yourself, you may be eligible to receive up to 50% of your spouse's benefit amount assuming they qualify and you've been married at least 10 years. This can be particularly helpful for self-employed individuals who had fluctuating or low earnings during some years. For those with disabilities, Social Security Disability Insurance (D) is also available to self-employed workers, but qualifying can be a bit more complex. You must have earned enough work credits, typically 20 credits in the last 10 years, and prove that your condition prevents you from engaging in substantial gainful activity. Because the SA evaluates self-employment income differently from traditional wages, proving eligibility can be a bit trickier, especially for those whose income varies year to year. Keeping accurate records and working with an experienced representative can make a big difference in the outcome of a disability claim. One of the most important steps any self-employed person can take is to create a My Social Security account at ssa.gov. Through this account, you can track your earnings history, estimate future benefits, and check to make sure the SA is properly recording your self-employment income. Errors in your record can result in a lower benefit, and the sooner you catch them, the easier they are to fix. At Secure Your Benefits, we always recommend being proactive. If you're unsure whether your income has been reported correctly or how much you've contributed to Social Security, now is the time to review your statements. With the growing reliance on freelance, contract, and gig work in the American economy, the SA is likely to continue adapting its systems, but the burden still falls on individuals to ensure their future benefits are protected. Before we wrap up, let's quickly address retirement planning. While Social Security is a crucial pillar of retirement income, it likely won't be enough on its own. Self-employed workers don't have access to employer-sponsored 401ks, but they do have several retirement saving options like SEP IRAs, Solo 401ks, and traditional or Roth IRAs. These tools can complement your Social Security benefits and help ensure financial stability in your later years. So, if you're self-employed, now is the time to take charge of your future. File your taxes correctly, report your income accurately, explore retirement savings plans, and stay informed about the changes that could impact your benefits. Social Security isn't just for 9-to-5 employees, it's for everyone who contributes, including entrepreneurs, freelancers, and independent contractors like you. Thanks for watching Secure Your Benefits. If you found this information helpful, be sure to like, subscribe, and hit the notification bell so you never miss an update. We're here to help you stay informed, make smarter decisions, and secure the benefits you've worked hard to earn. See you in the next video.